I want to introduce you to one of my good buddies, Mike Moran, who's done exactly that. This is like the poster child for joining the group and retiring. But Mike's got a really awesome story about what he's done with his property, his background, and how he's just focused on economies of scale. But he's a little bit different than me, where he'll share a little bit about his single family roadmap and how he owned some of the single family homes and said, "What's next?" So he joined the LU program, bought his first property, and now he's going to talk about the property he currently owns. Mike, you there?
I am.
There
Hey,
you
Alex.
are. Hey, buddy. Good to see you.
Good to see
So,
you.
Mike, good, man. Good. So, tell us a little bit about yourself for the group here. There's a ton of people that are excited to see you.
Sure. Well, started off with a music degree, actually. So I went to Eastman School of Music in Rochester, New York, and tried to do that for a while. So I actually ended up teaching for a total of about 16 years. And what really drove me into real estate was I got a promotion to get, make a little more money in as a band director and get into a little bit better, what's considered a better school district. And in fact, it was the worst thing I've ever done. So I ended up within the first 3 or 4 months saying, I got to get out of this, and really set a plan together for about 5 years to acquire 10 single family homes. So some of the stories that you guys were hearing before is exactly what I did. Was we started off buying one, then we were buying two, then we were buying three a year. And really the last year when I bought my 10th house is when I was able to retire.
Yeah. And then when you retired from that the single family, what did you do next?
So after that, I enjoyed the summer. It was kind of summertime. So I just did nothing for a while. It was great. But we wanted to continue to grow. I didn't have the W-2 anymore to continue to buy properties. I didn't really want to get into portfolio lending or find other avenues for single family. But I also was finding that keeping up the single family track at a certain point starts to be a little heavy. I was self-managing everything. I also went from a knowledge of almost nothing on how to repair things to being able to repair everything. So one of the last things I actually ended up doing was repairing roofs. So that was kind of unique because I don't really like heights. But after that, now even this morning, actually, I was on a roof this morning. So that's kind of where things lead you. But it gives you the knowledge because now we're at the point where we have employees, and I actually know what they're supposed to be doing as well as how to do it. So it actually kind of makes things easier on me.
Yeah. And what was the size of that first property you bought?
So the first multifamily was 18 units. It was in a tertiary market, so outside of the DFW Metroplex. It was an all-cash deal, which was kind of nice. And because really, you're not ever worried about paying the note, and you kind of get to do whatever you want to do because you don't have a lender telling you what to do. Um, and it just cash flowed like crazy. So it was mismanaged. It was we were the second owner. It was an 80s property. We were the second owner. The former owner had passed away, and it was handed down to their relatives who all had their own businesses. So they stopped leasing. They let it go. It was in really good shape, but they stopped leasing. So essentially, if you do the calculation based on NOI for the value of the property, we were able to almost really just take it out from under them. So
Right. So just to give the group here a little taste of, that property, how long did you own it for?
we owned it for 2 years.
And what was the return on that investment?
Oh, I have to remember about that. So we returned all the capital plus 180%.
Beautiful. Love it. Okay. So now then you had that deal and you sold that and you moved into the next one. So let's talk about your next project here.
Sure, Big Island. Beautiful location right off a major lake in DFW. It's actually we kind of migrated from upstate New York, Rust Belt area, where we noticed there was not any opportunity, and I had toured as a musician all the way through the Southwest and actually all the Midwest.
And you were a drummer, right?
I was a drummer, yeah, I was a
Yeah.
professional percussionist, and obviously went the teaching route.
Touring with Metallica. Was that correct?
Yeah, when you had asked me earlier, I was like, because I don't really have favorites, but you're like, what's your favorite song? I was like, I'll just say Metallica 1 and appease
Okay,
him.
that'll work.
But yeah. So yeah, we kind of were, it was with actually a drum and bugle corps. So it was kind of military style music that's on football field. It's actually put together almost like a Broadway level uh, production on a football field. So it's pretty cool.
Okay, so 120 units built in 72, and kind of go into that slide a little bit, if you would.
Sure. Yeah. And actually, I'll just point you over to the picture. So you can kind of see there's a mural on the building. We ended up keeping that, but the building is kind of a faded blue color. This is an out-of-state owner. Wasn't really maintaining the property, and really, so I live about 15 minutes away from this property. It's truly a gem. It's on a peninsula, again, right near the huge lake in DFW, in a targeted investment area, and they had just, I think that they had just didn't have their hand on the pulse of what was going on over there. And I was like, oh man, there's some opportunity happening. So, and very similar to what we were seeing with the first property, where they weren't investing money to rehab units, so they had a higher than normal occupant or vacancy level. But anyway, going to the slide, we did get, we purchased for 10.2 and had to raise 4.5 million, which was very scary to do for the first time, especially coming from teacher salary, and my wife's a nurse, to having to figure out how much really $1 million is.
Yeah.
So able
So
to get,
what was the lowest investment amount from one of your passive investors in this deal?
sure, 25. So we had, I think, 2 or 3 people come in at 25,000.
First time members or first time investors?
First time investors, sometimes I think we had one person at 30. Sometimes it's what they have left. So
Right.
if they're, got into other deals, if you only have that much and you have a good opportunity, it's, we're willing to listen and see if we can fit you in.
Yeah. Yeah. So Fannie Mae non-recourse capital repairs of $1 million. Um, let's move on to the next one, and
Hold
because I
on a
want to get
second.
into that.
Mike,
Okay.
how many investors total were in this deal?
There are 74.
74. Now, here's something I want to say for the new folks. What I like about Mike is he didn't say, let's just let all the millionaires put their money in. He helped out the little guys that might be a firefighter, whatever. They only have 25 or 30 grand. So when you see these big numbers like 10 and 4 million, don't let that intimidate you. These are real people. Mike's doing all the work, in charge. These other guys are putting their money in the deal. They're getting a great rate of return, and they're not involved. In other words, they just have to read the reports and they get a check in the mail. Correct, Mike? I just want to make sure people understand that if they're
That
new
is
to the
correct.
time.
Yes.
Okay, that's all I want to cover.
And the other thing is, through what's going on, Mike is still sending out distributions.
That's correct. Yes. We did hold back, I think Q2. But Q3 we did send out, but obviously it's a company. My job I see as a person that needs to protect the company. So we've obviously held back capital just to make sure we're going to be able to weather any storms. But really looking forward for when this COVID stuff is over, and we can really run truly full steam and be able to liquidate all those funds.
Right. Okay. I could see your wife's touch there on the entrance.
What, my house? Oh no, over there.
No, with a slide. Yeah,
Yeah,
your
that's
house.
her. That's her. She likes mums.
And one thing I want to bring out about this, Mike is a musician, right? He doesn't want to work. He just wants to bang on the drum all day, But the point is everybody can do real estate. It doesn't matter if you're a musician or whatever. Some people think I have to have a PhD in real estate. You don't. So I just want to make sure people know that too, even all these apartments.
And I'd say too, I feel like that single family background, the fact that we were so hands-on, which is not necessarily a lifestyles approach, again, truly really understanding how to fix things and how everything's operate. I actually have a real estate license now too. So understanding kind of real estate law, it really does come in handy, especially when you're managing large communities.
Right. So walk us through some of these before photos. What was going on here?
Sure. So the one you're seeing on your left is a balcony. So these balconies are supported with wood, so like 2x6s, and then concrete is poured in. And what happens is the concrete cracks, water gets in, and the wood rots. So we had to build or rebuild, I think, about 13 of the patios.
Hmm.
And you'll see in later slides that we actually ended up covering the top patio, and then on the bottom patio, you'll see there's wood on the bottom. We ended up going back in with cedar, a stained cedar look. So second slide, we have some flat work, so concrete cracking and tripping hazards get corrected throughout the entire property. That's usually a lender requirement. Next slide is some stucco. So stucco as the buildings move, stucco tends to crack. So in this case, I think the repair was heavy enough that we actually went in and had probably saw cut out the stucco, went back in with new stucco and painted it. And then the last slide is a little bit of the disaster that was our pool. So that changed drastically. That whole look over there is just night and day.
Yeah, it is.
So we went with this. We went with a kind of a gray and white and black color scheme with blue doors. You'll see in this photo where we did put up that kind of siding look on the second story, and then on the second picture there, you can see that cedar look on the patios downstairs. We actually kept the branding. Bay Island, it's kind of nice for the area. People know that kind of where Bay Island is, and especially with the mural out front, we really do stand out. So we did keep the branding, but yeah, again, redid the colors on the buildings and added some amenities. So that last picture there you see on your right is our new bark park. So residents get to have their dogs in there, enjoy their morning coffee, and then head out for their day.
All right.
All right, pool area. So pool area, the pool I don't think was open for 2 to 3 years before we bought it, and that wasn't really disclosed to us. It appeared to be open when we were doing due diligence, but we slowly figured out. Obviously, every single resident came in and was like, "Hey, you can open the pool because it's been closed forever." So we went in and resurfaced it really with like kind of epoxy that goes over the plaster. For now, it's a temporary fix. We also pushed out the flat work, so you can see that the decking of the pool far extends beyond the original concrete. It used to just be grass and bushes, which was all blowing into the pool, making it harder to maintain. We also put in an outdoor kitchen, which everyone loves. So even if the weather's not very nice out, they can kind of huddle under the pergola and then have a nice charcoal grill.
Yeah, it's super modern looking. It looks great.
Thank you. So interiors. So most of the interiors now are mostly light turns because really what the market's demanding and our occupancy is so high, there's not really a call to go in and do heavy lifts. But here you can see the first photo, that's the kitchen. So we are redoing the kitchen bar area. We cut out the fur down. So there's actually kind of a wall that goes above where there's cabinets. We took that out, opened up the space. Third photo, you'll see new cabinets, so shaker style with cabinet pulls, granite, stainless steel appliances, and then modern paint scheme. So two-tone paint scheme, and then a nice, it's actually vinyl sheet flooring that looks like wood. All right, bathtubs. So in this case, yeah, this was a full upgrade. So we ended up going all the way to studs and then went back in and put in some nice 12 by 24 ceramic tile. We actually will end up redoing the manifold. So you'll see in the second photo, it has kind of that 3 lever, and then we go with this if we end up doing a heavy lift. And then again, there's granite on the countertops in the kitchen, and we just painted the vanity and put in a frame mirror.
Yeah, that looks great too.
Thanks.
Hey, go back to that, David. Go back one. One more. To the kitchen. It's just that kitchen, it just pops so much. And, so many residents, when they move into these apartments, they're not used to seeing these beautiful kitchens, these beautiful bathrooms. Usually you walk into these kitchens and it's just scratched up, burnt up Formica countertops, no granite. You're lucky if you have any of the pulls. I mean, so you guys really did a great job. The eye for detail that you had. Go to the next slide also, David. The ceramic tiles there, 12 by 24 inch. I mean, it just pops. And the good thing about that is by having those tiles in there, you never have to do a resurface on those tiles. So it's almost like what you guys have done here is you've bulletproofed this unit. And so that your turn cost, which is the cash flow killer, becomes a non-issue. So I love it.
Yeah, and that's what we're seeing now. So we've owned the property for almost 2 years. Our turn cost is extremely low.
Right. Yeah. So talk about the progression over the years and where you're at right now.
So where we are is more as far as, let's see. So cash on cash return, we're probably between year 2 and 3 currently. This is not going to talk about the valuation of the property yet, but we're pushing. So a good example is our 3 bedrooms when we acquired the property, we're renting for $1,100 a month. We were able to push those currently to $1,500 a month. So that huge increase in NOI is really helping push the valuation of the property.
Yeah. Okay. Let's go to the next slide. Yeah.
So really quick, just for folks that are new, they're listening for the first time, that's a bunch of numbers and gobbledygook. I'll break that down in the seminar so y'all understand it. But just think of it this way. Think of it as if you're investing in a CD or a bond. And the bottom is your return, tax-free, 7%. That's what they're making, 7-8%. And that's what we want to make. We want to make around 8%, which is better than, but remember, you're making more money one way here, okay? It's not like a bond. Because the big thing is, by him doing all these repairs, by him fixing up, by him upgrade a property, the next slide is going to show by him being able to increase that rent from $1,100 to $1,500. Well, what does that do to the value? And that's what this next slide is going to lead to.
Right.
Okay.
So right here, this is more what I was wanting to talk about, I guess, is NOI. We're actually easily in year 3, and especially if you were going to value the property off of a modern caps, I think I was probably valuing this at a 6 or a 6.5 cap. Things are trading a lot lower than that right now.
Conservative, right? On your numbers?
Yeah. Yes. Yeah.
You'll always hear that out of my leads and my mentors. They're always conservative. They always make better than what they say, but that's a good thing. I don't want them to overpromise.
That's true.
Yeah.
So really you're looking at like over 100% return.
Correct. Yes.
And we can compare that to the people out there that are comparing, if you put in 25 grand, 50 grand, 100 grand, would you like to make 100% in 3 years? The answer should be yes, that's better than my crappy 3%, right?
Correct.
And do you know what the technical term is, Mike, when you make over 100% return for your investors?
God.
Not laughing, there's an actual term.
No, I do not know. I do not know the actual term.
Alex, do you know?
Pee in your pants, exciting.
Oh, there he goes.
It's that is a technical real estate term, guys.
It is. Mike, you didn't learn that.
I did. I heard it on the last one. I was like, I'll let someone else take it this time.
Oh, it's more fun to make everybody say it. I like these really conservative guys I bring on and make them say pee in your pants exciting, especially when I bring them on radio or TV. I love doing that.
Yeah, you do.
It's just a Dave Fisher thing.
He's got me broke down, so I do it every time.
I know. You're trained well. By the way, I love your show, Alex. It's awesome. Okay. So folks, if you're listening, it didn't matter. Mike said he had, I think, 3 investors at 25, 1 at 30. It didn't matter whether you put in 25 grand, 100 grand, 200 grand. It doesn't matter what you put in. You made 114% return on whatever you put in there. Now, Mike, would you do me a favor? Is that me?
Not mine.
Okay, that's yours. Okay. So, Mike, would you mind explaining to the folks out there? You did all this work. You put this deal together. How much work did these investors do on this deal? Can you explain them the life of a passive investor? Remember, there's new people who never tuned in before. They don't even know what a passive investor is. Would you explain how much work your investors did?
They may have written me a check or wired me money.
So, and they got a what? A check once a quarter?
Yes, they get a check, and it's always funny to see the people that cash it late, like a few months after you send it. So
yeah, it's like they don't need the money.
So while I'm reconciling the books.
Yes, it drives you crazy though, doesn't it? So, and it is that easy, folks. That's what I want to make a point to. Okay, awesome. All right.
Cool. So keys to our success. We actually started off with a management company, and I think for us it was very beneficial because we kind of learned kind of more like a localized in and outs of which vendors to use because it is, single family, multifamily are very different. We were able to get a little bit of knowledge on the program software that we use to manage the property. So we kind of got our toes wet and then realized at a certain point that the property wasn't running the way we wanted it to. And really, after 8, 9 years of managing our own property, we're like, well, this has never happened. So we finally figured out that the reason it was not running the way we wanted to is because we weren't running it. So we did take over where we do self-manage. We plan on continuing to self-manage. It's very rewarding. You don't have anyone in your way. You're truly the boss. So when you say something, it has to happen. Another thing is adaptation. So obviously, even in the last example, you can see just being able to pivot when you feel like things aren't working the way you want them to, trying to figure out a new plan, consulting your mentors, getting on the phone, having a network of people that you can talk to about very kind of the minutia of management and running properties like this. So it helps out a lot, and also being a good listener about it. So more often than not, you learn what to do rather than what not to do. Continuing to push NOI, that's always kind of a fun one. I feel like right now on this property, it's running really well considering everything that's going on with COVID, but we're really excited about being able to run it freely again, hopefully by the start of next year, and then we should really see another big bump in that property. So very happy and excited about that.
Okay.
No, same thing, being able to talk to like-minded investors. Kind of a neat thing for me was the job that was a promotion for me. It really was very toxic environment. And so it was weird to go to one of our first lifestyle meetings as really we were kind of just passives. We weren't even leads yet, and talking about our experience in real estate, and that we had bought homes with no money out of pocket, and that had a house that actually almost burned down and made a huge profit off of that happening. And people being like, oh, you're really good at this, and hearing positive things from people that are very successful compared to hearing constant negative things from people that are going to be there for the next 20, 30 years of their life. And then also just having the map of multifamily to fast track. This has been a huge life changer. We're actually looking to acquire another property soon, so it's gonna be a big deal, a big change for our family. So we're very excited about it. Short-term goals. So property number 3, like I just mentioned, it's in the works. We have one more single-family rental. So COVID hit me with a little bit of a curveball. So we were liquidating. I think I liquidated 3 homes this year. Listed them myself. Did all the GCing and everything like that. So was able to really draw out some good money off of those. But we decided to keep one of them until the turn of the fiscal year so that we can not have such a huge tax hit. So sometimes there's a tax hit if you're having to liquidate, especially if you're changing routes in real estate. Long-term goal is to acquire 2,000 units. I think one of my slides before used to say 4,000 units, so backed it down just a tiny bit and make it achievable maybe in the next 4 to 5 years. But I think this deal 3 really is going to help us be able to KP deals. We've already been teaching our kids, how to do your own business. Like we have constant conversations with them about, what they might do in college. We do obviously encourage a lot of activities. So our boy plays baseball and our girl does a lot of dance and gymnastics, and they actually just love those activities. But we always have in the back of our mind, and as well as their mind, hey, let's get an MBA. So, and then hopefully invest in real estate. And then, we love traveling. COVID has again thrown a wrench in that plan a little bit, but we do tend to travel quite a bit and really enjoy Europe, especially Italy area. And also, we used to have an RV, and I was talking to Alex earlier. We sold it for now, and then are hoping maybe in the next 3 to 4 years to start doing that again.
Awesome. All right. You want to thank some folks, help you along the way?
All right, I'm going to do a shout out. My sister Katie is a member. Hey, Katie, she's in Rochester, New York. She's a police officer.
Oh, cool.
Hopefully you're still on. Got some other shout outs. Carolyn Putney, multifamily broker, realtor, awesome to work with. Lender, Ricardo Hinojosa with Old Capital. They're amazing. They are truly the godfather of multifamily real estate lending in North Texas and across the nation. Insurance, Jeff King is awesome at Raymond King Insurance. And then special shout out and thanks to our investors. We couldn't do it without you guys. And then also our KPs who help us structure these deals.
Awesome. All right. You ready to take some questions, Mike?
I'm ready.
Okay. So, folks, if you got questions, now's your chance. Let's ask them.
Oh, they've got questions. They have
I'm
got
sure they
questions.
do, Isaac.
Give me one
By the
second.
way,
to pull up.
Mike, what do you think of Isaac's hair?
I like it.
What?
Yeah.
Oh, thank you. You're so
He's got
sweet.
his thing going on. I'm cool with that.
Oh my gosh. Keep going. Keep going. All right. We have got, let's see. How do you attract passive investors, and how long does it take to get them? And what's the typical rate of return to the passives? It's a three-part question.
So the cool thing about real estate, it's always changing. You know, as a music teacher, it was like literally the same thing every day. Like it's just a program. You just try to chip away at the kids and get them to do exactly what you know to do to be successful. Real estate changes constantly. So it could be a different answer next month, next 2 months, next 3 months. You just never know. So I'm not going to answer, I think, the return thing. Just based on that, it's just there's always a new opportunity or a new way to make money, and it's going to shift either in one way or another. As far as tracking passes, we were very active. So the first 2 or 3 years of our membership, we were at literally every single meeting, and just talking to people about real estate, and we really did find that not only going to meetings was great, but doing the hangouts afterwards is really where you start developing deep relationships with people. So, and now I can put a plug in for Lifestyles. We're going to be, our team is going to be on Podium. So we're actually getting integrated as we speak, and we should be up and running hopefully by the end of next week. So I'm very excited about that. That should be an easy way for us to meet passives, especially in times we can't go to the office, and as well as raise funds electronically.
And folks listening, if you're new, you know, that's a new question probably from a new member. I explained how this is all done during the seminar, how these people meet these lead investors, how they can interact with them. But literally, you know, our lead investors can raise millions of dollars in a weekend. It's very easy with the size. We have 50,000 members nationwide, so it's easy for them, but it's also easy getting deals. We have hundreds of lead investors that people can decide if they want to invest with them or not. That's on their own how they do that, but we explain how to do all that. So, okay.
Mm-hmm. A lot of people give you compliments on the good work that was done on the property, so congrats on that side, Mike.
Thank you.
Somebody asked, how many hours a week do you manage the property?
Oh, that's a good question. So another LU mentor, when I first decided to start managing, it's like, oh, no problem, it's easy. I think it depends. There's different leads who self-manage spend different times, different amount of time on the property. So I would say we're probably in the high middle range of amount of time that we spend on it. But it's because we're very committed to being successful in this, and we take our role as, you know, someone's handing us a lot of money, and we better not screw up. So I actually still will get my hands dirty on the property. We do go out and, you know, we do some work. So, you know, but that also means that like today I was, you know, I basically did whatever I wanted to do today. I had to go drive a property. So I was in the truck for like 3 or 4 hours today, just doing whatever I want. So it really just depends on how much you're wanting to do. I would say it's not like a full-time job, But as we grow, I'm going to be doing less of the accounting, and you're able to, as the bigger you get, to actually start dividing out the work. So you're not doing, the payroll department, accounts receivable, all the accounting, all the managing, all of the ordering. So it's a lot up front, but I think it pays off in the end once you start to grow.
Yeah, folks, I want folks to understand, this is a full-time job what Mike is doing. The investors, I'll use a technical term, they don't do shit. But Mike does. Okay, I want to make sure. You want to further on that, Alex? You were going to try
Yeah,
to say
I want to add to that. So Mike is being very modest here. This dude has busted his butt for that property. When I was out there and just comparing, we were standing out by that mural and near his sign and just doing a panoramic view of all the other properties around him. His stands out more than any other property. I mean, you could see the time and effort, the creativity that he's put into this property, which is why, again, the model works, which is why he's so successful on this property and his returns are so good.
Thanks, Alex.
Welcome.
You are a great hype man, Alex. Well done.
All like I see, if anything was bad, I would tell you.
you do a crappy job, Alex would say that too. See, we don't share.
I would.
That's
We
true.
tell people what they need to hear, not what they want to hear.
Yeah.
Very, very true. So I've got a question for you, Mike. How have you dealt with previous bad ratings on like the ratings on the property before? What tools did you use to overcome that whole situation?
That's a tough one. So in this case, we chose not to rebrand. So I would suggest if you are dealing with a property that has a lot of bad history, the first thing you do is rebrand it. We decided that the branding on this one was so good to kind of eat it. And I think word of mouth speaks more than anything else. So we have several residents that have literally from out of state brought in their relatives to live with us. So we do get a lot of referrals. Like I said, we have a community that almost engulfs us. They own probably 1,000 units in the immediate area. And they'll have like 15 to 30 one bedrooms vacant. We're like at 98%. So, and we're like $200 more per unit for the same age product. So
Wow.
I think, yeah, word of mouth is really what's helping us get along. And the cool thing to see with this property in particular was we were looking, actually I was looking through our business plan, and one of it was to truly create a community. So we went from day one, people saying, I don't trust my kids to go outside. I don't like this, I don't like that. We have weird people walking through the property that don't belong there. To now, we're almost kind of like I want to say like a green zone, but it's a totally different vibe. Residents are outside barbecuing together, they're hanging out, their kids go to the office to pick up the mail unsupervised. It's a totally different community just in our little area.
So just to summarize this for people that are new, there are apartment complexes out there. That's what we buy. Mike turned into an apartment community. It's a sense of belonging and like a family now. So what you do really, the best way is by doing what best product, best price, you attract the best people. And every resident, when they renew or whatever, you go, wow, you're so happy. Could you please leave us a feedback? Could you please leave us? So they're all positive now, so it buries the old stuff because the new feedback is gonna be, the new owners are great, they fixed everything up, it's wonderful. So that's how you bury bad stuff. And this is stuff we teach you guys.
Yeah.
Great question.
Yeah, and we get involved, so it does go all the way up the corporate ladder for us. If there is an issue or if a resident isn't happy, we do go the extra mile. Actually, a story recently is we had someone that had a water issue in their apartment and they had to use their towels to sop it up. So we actually were able to repair the issue for them, but then also we went out and bought them all brand new towels. So we did that on my dime. So just little things that kind of go the extra mile that make it more of a home.
So Mike, if one of your residents, for example, would be playing his drums late at night, what would you deal with that?
That was me about 20 years ago. What would I do? Well, I don't know. I'm just kidding. Obviously, you can't do that, but it depends on whether or not you're calling the cops at a certain point.
All right, what do you got, Ethan?
Okay, we have got somebody real quick said thank you so much for sharing your story. They're investing in single family right now and they're wanting to move on to multifamily, so they're really excited about that part.
Do it fast.
Yeah. Somebody asked, how did you find this deal? I think that's a good question to ask.
So actually, this is lifestyle centric also. Lifestyles had a road trip that was a acquisition road trip. So this is a property that was presented, and again, it was near my house. And I think a good thing for us is I feel like we're serious buyers. We, with the experience of, being able to walk through a house and say, okay, it needs this, 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 and it costs that much exactly, very quickly, allows us to kind of look at deals. And, once we get under contract, we don't really fiddle around. We get the deal done. So, I don't know, hopefully that answers that question.
Yeah, so folks, this weekend I'll explain about these road trips. Mike was on one of the Lifestyles organized road trips. They presented this deal, and Mike and his group of people decided to buy it. So he found it through Lifestyles, basically.
Correct.
Perfect. Let's see. How many more questions do we have? I just want to make sure I'm not taking everybody else's time. I could do this all night.
Go ahead. It's fine.
Couple more? Okay. Then you've answered half of this question already. It was, do you have an on-site property manager and on-site handyman?
We do. So we have an office manager, and then we have two maintenance men on site. So one of them's a supervisor, and then the other one acts as kind of a porter. So they clean the property, clean the office, clean the laundry room, but then also operates as somewhat like a make-ready person. So they're doing painting, pulling light switches, like any little thing that you can think about to do an apartment. That's his job.
And they're full crack maintenance men, correct?
Yeah, they're so. Oh God.
I'll throw Mike off. He's not used to me.
Yeah. I was about to say, try to take David's questions as not seriously as possible, Mike.
They're really good guys. Like we're the other cool thing that we've been able to build is not only a great community, but also a great staff. So having an excellent team there makes my job so much easier. And it's really good. I feel like, because I'm more having to deal with the business side a lot of times, and sometimes I have a tendency to be able to lose that personal touch because I'm more like a numbers guy. But having someone there that's able to kind of be on that same level and kind of like resolve issues, and as well as, especially the maintenance guys, having so many talents and being able to knock out so many different kinds of work orders and jobs really makes my job a lot easier.
Awesome. Let's see. How did you know how many passive investors you needed? And like, what was the process? Did you get all of your investors before making an offer? Is kind of part of the question too.
So we went from 18 units.
SEC laws, but.
So we went, and that's a good question because we get that a lot. I actually have a friend who's trying to acquire real estate right now, first time lead investor. But so our first deal, I would say we probably had like 150 to 200 people to fund an 18 unit deal. Our next deal, we had, I think, about 400 to 500 people. And that sounds like a lot, but not everyone's all ready to pull the trigger at once. Some people are still educating themselves and just getting familiar with what a PPM looks like. Some people, have already invested and don't have the funds right now, but would like to have invested. So it was scary, first time trying. You're putting out a lot of your capital up front, and then you're trying to raise a huge chunk of money, and it can take a while. It can be unnerving if you're not used to it, but we feel like now that it's kind of like a new challenge. So we feel like that's under our belt now, and more comfortable with being able to do that more effectively on the next run.
We've got more questions if you guys are ready for them.
I'm cool.
Keep
going.
I'm watching the clock.
All right.
I'm watching. If people all get bored and hang up on us, then we'll stop the questions. But he's going
Okay.
on. They want to hear from Mike.
So keep it interesting. Got it. Let's see. People are still asking about percentage returns for passive investors and stuff.
Okay,
David,
let me cover that in a generality. So Mike doesn't. You got to realize, Mike, he's promising these people this certain return. So he can only say on this deal so he can't speak in generalities, but I can. What do I teach? I teach people to try to make an 8% return and 100% every couple of years. That's what my goal is. Mike's right in that line, 114% and like right around 8%. That's what our goal is. If a deal only makes a 7% return and a 70% return, is that still good? Yes, it is. If it makes a 12% return and a 250% return, is that a good deal? Yes. The point is, it's way better than what you're doing in the outside world. Compare it to what you're doing. You know, I came into lifestyles with 70 grand turned to $8 million. You know, this stuff works, but it only works if what? You take action and you do it and you step up. I stepped up, Mike stepped up, Alex stepped up. I think Alex, from the time he joined till now, went up like 600% net worth, or what was your number from the time you first came to my seminar? You were bald back then too, but go ahead, tell them. Just real quick, just to get the idea.
It's almost like the hair, just, you know, the more success, the less hair I had. But yeah, it's well over 600% increase. Yeah, you know, and the crazy thing is, I had no idea at the beginning, but lifestyle teaches you this thing called a PFS, a personal financial statement. Where do you stand, you know, and how to figure that out. And once you start putting your income in there, your assets and your liabilities, and you start out with a negative and then you turn it to just a positive, and then you got 100%, 200, 300, it changes your life.
Yep.
And I would say too, because I actually started, I guess, the investing route. I just came home one day saying, I'm liquidating I think I had a Roth IRA. And my wife was like, no, you're not. And so she actually didn't get really involved until after 4 years. So I would say also just be patient. Like, it does happen, but it is hard to figure out, like, oh, I'm not rich tomorrow. So it just, you know, I guess enjoy the journey, and just know that you're on the right track once you're in the business.
Awesome. Someone left a comment that
Let's do
said,
one
"My
more.
wife."
You can do one more. One more,
Wait,
Isaac. Go.
This one's a comment, not a question, but they said, "My wife and I are in this deal. Have not seen the property nor photos recently. Truly passive income, the very definition of following the map." So,
Oh, so it's somebody in the deal.
uh-huh.
Cool.
Another
So you're
person.
pretty happy, Mike.
Yep.
What's that?
Yep. Let's see. I guess we can ask this one. What percentage or how much personal money did you put into this project?
Quite a bit. So you have to do a minimum on deal 2, and it was nearly $500,000.
Very nice.
I like the fact that Mike has skin in the game.
There we go. There we go. It's really important, because what are the odds that you're going to even let any of this slip during that time when that much money is on the table of your own hard money?
Yeah.
Right.
You're going to spend all your time working on that one, and it pays off. Okay, last real question. What percentage of the property has kitchens finished out with granite?
Oh, I would say not a huge percent. I'm not going to say a number. It's probably like 8, 9, 10%. But we were finding in the market that, so granite, actually, so what we're looking at on the next one is to kind of go a little bit more gung-ho on granite, because the other upgrades aren't as needed. It already has kind of like nice flooring and everything. But for this deal, this one needed a little bit more of a heavy lift on the exterior and interior. So we were finding that at a certain point we could do better just doing kind of a basic turn rather than going full bore and just going nuts on granite and just.
So what is this what you did, Mike? You tested a unit. If it got higher rent, if it didn't, you didn't see. Well, we teach you there's an order. You just don't go do everything, because if it doesn't give you a rent bump, it's not worth doing.
Right. And when you start doing more repairs, it's more time off market. So right now we're turning and burning real fast. Like, I'm turning a unit. We started on Tuesday. I'll have it completely turned and moved in on Friday. And I don't try to guess how much we're spending. It's not much. We're spending a couple $100 to turn it. Okay. So we're turning fast.
There you go.
Very nice.
All right. Well, thank you both for sharing with us tonight, Mike. I really appreciate you giving back. And Alex, thanks as always. Appreciate it. So now that they're done, what I'm going to do is I'm going to stay. I'm going to go through our membership and benefits, but me and Isaac will stay for any other questions You know what I mean? I don't want to hold these guys all night, but I really appreciate you guys giving back. Thank you so much, guys.